So in the past decade, dividend return was 16% of total return. Price return was 84. But if you go back to 1936 through now, dividends represented a third of the returns, about 36% of the returns versus price 64, which is in line with the 493 outperforming because most of them are dividend stocks. And you see in our portfolio, we have a lot of dividend stocks that have started to do exceptionally well. So look at this moving forward. China bond yields at all-time lows. They're starting to defend this. As we said, watch this as an indicator for equities to start to turn that 2016 to 2018 move, 29 to 2011. This needs to turn. It will all turn at once. This is an extreme like we saw in 2020, and you got a monster rally into 2021 as well every time. We expect another owner's equivalent rent in July. Fine, that's great. Dallas Fed manufacturing. This is where you see the mixed stuff regionally. Excess COVID-related money has waned. Inflation should maintain its downward trend. Dallas Fed manufacturing expected new orders. So current new orders were not good. Expected new orders are looking really, really good. This is really coming out of a trough here, so it's good to see. Little delinquency rate moving up in credit cards at the lower end of the consumer, something to keep an eye on. Noted, and I'm sure the Fed is looking at, we hope the Fed is looking at that as well, but it's historically low, even though it's rising. Share of households planning to move over the next 12 months has increased recently. So with expectations of rates coming down, I think people are finally going to say if they can get 25 or 50 basis points down, they'll sell their house and finally move. Japanese yen leveraged funds. So that was at the extreme. China's government bond yield, we covered that. This is the Bloomberg Economic Surprise Index in purple relative to the S&P 500. So this is starting to turn back up, which is what we want to see. The market came in a little bit to follow that, but the market, meaning the Mag 7 in the cap weighted, everything else went up. Here we have the KBE Bank Index. Had a monster month, by the way. Regional banks were up 18.3% last month, which is unbelievable. The basket, not just one stock that had a good run, the basket, which means somewhere up 40%. Declining share of Americans say they're likely to consider buying an electric car. Weekly flows by client and sector, so they were starting to flow out of tech finally. Today's largest 7 are cheaper and of higher quality than 2000.